A couple of years ago, I came across a system that's helped me manage my money better and basically has given me this flexibility and this freedom to know that, okay, whatever the things are that I need to pay, even if I was earning less, I would be able to cover. And so I'm going to go through that in this video now. Most people may think that the solutions to their money problems is to just to go and make more money. And yes, obviously making more money will help. But as I said, we're always trying to fill that vacuum, whether it's yourself wanting to upgrade your car or wanting to upgrade your phone or upgrade your laptop or upgrade your lifestyle in some way, or somebody external to you that's pushing you along to upgrade those things, if I can say, into having a better life. And sure, we all deserve a better life. I'm not saying you shouldn't deserve a better life, but there's a systematic way that you can do that. So the system I'm talking about is called Profit First by Michael Michalowicz. I hope I got his name right. Definitely recommend reading it. And I'm going to go through some of the principles here. Obviously, I can't give you the detail in a short video like this, but the book will go into more details if you pick it up. The link will be in the description. What Profit First is a way to manage your money, but also a way to split the money into various categories. So each of these categories or each of these are bank accounts. Income is an account that your money is all going to be paid in. Maybe your salary, maybe you have a side hustle, maybe you're selling, your thrift shopping or whatever income that you have from outside, affiliate revenue, or maybe you're selling a course and you have an e-commerce business, whatever those things are, whatever income you have will go into that bank account. From there, an income account will hold that money for a certain amount of time, and maybe twice a month you're going to separate that income money into 4 other accounts. The second account is profit, which is basically all of the profit money that you should be making from all of the income that you have, and there's a certain percentage. Second is owner's pay, so that's kind of money that you're going to be paying to yourself as an owner. Third is tax. Obviously we have to pay tax, and there's certain fees that you have to pay, accountants fees, tax to the government, tax to the state, whoever you need to pay tax to. Then there's the operating expenses, are things like your electricity, your internet, your phone, subscriptions that you have, all of those things that are related to your business or related to the income that you are receiving. And so the way that you would split this out, and the way that Michael proposes in his book, is that you figure out first how much income you have, right? So calculate how much income you have, then go and look at your statements and say, okay, of all of the things that you spend money on, what are expenses, right? So if your income is $100,000 and let's say you're spending $40K on expenses, then your percentage of operating expenses is 40%. Then of course there's tax. You have a percentage that you have to pay for tax. Then you obviously should be putting some money aside for profit, and you should be putting some money aside for your own payment for your salary. Now, depending on the income range that you have, and you can do this in a joint account with your spouse or with your girlfriend, or you do it individually for yourselves because maybe you're separating things, but the percentages should be according to what Michael has a range in the book in terms of what those levels should be. So for example, if you're making less than 250,000, your profit should be around 5%, owner's pay should be around 50%, your tax should be around 15%, and your operating expenses should be at 30%. And I gave the example earlier that $40,000 against $100,000 income is 40% expenses. That means your expenses are too high. So you need to cut your expenses down if you're earning less than $250,000. And so look at your subscriptions, look at the house that you're living in, look at the car that you're driving, cut those down to a minimum so that you can start allocating more money into your owner's pay and your profit, and then adjust your percentages over time. Now, the book goes into detail in terms of how to actually calculate those and what you really need to work out. This video is not financial advice. All I'm doing is I'm giving you a process to figure out how to put money aside for yourself so that you actually have some flexibility and some freedom. And so, for example, right now, I have an income from a job, I have income from freelancing, I have income from affiliate revenue, and all of the money goes into an income account. And because I'm banking with a bank that actually does automate payments, anytime money comes in, it separates that money according to the percentages. The money is immediately separated and put into these various accounts. And so at any given point in time, if I want to maybe go on a holiday and let's say it's going to cost $2,000, I look at my owner's pay account and I say, I do have a little bit of cash here in terms of savings for myself because that's my owner's pay. That's what's due to me from my company. I could go and take that holiday, or I could budget for that holiday, further down the line. Or if I have to, upgrade my phone, or my laptop dies and I need to buy a new laptop, or whatever the case may be, the operating expenses of the business can cover that because I have that money set aside. So this process has helped me tremendously. One, just being able to separate the money and knowing in my mind that I can't just move money from one account to another account. So I'm being very disciplined about that. And secondly is that as soon as I see that my operating expenses are like higher than what I normally it should be because of some unforeseen expense or whatever, I would adjust the percentages, and I know that, okay, I need to be within the 30% or I need to be within the 40%, 50%, depending on what those recommended ranges are depending on my income level. So I know this is getting a little bit more complex than what you would have thought, but pick up the book, go and study your expenses, go and study your money, and figure out how you can, and sit down, involve your partner in this process, because this problem of not having money but earning money is always going to be around. And if you don't fix this right now, as of watching this video, if you don't go buy that book and figure out how is it that you should be operating a business or operating your life, then do that. I took this even a step further and I said, okay, if I have owner's pay from the business, then that salary is going into an income account in my personal bank, and I have 4 other accounts in my name on the personal side where I separate that into different things, right? And so I'm using the Profit First principles in my personal life as well, because I know that this has helped me on my business side, but on my personal side, of course, I want to be learning things. I want to be buying books. I want to be traveling. I want to going out on dates. I want to buy a motorcycle. I want to do all of these certain things in my life. And these sort of things, the system allows me to separate that money so that I can do the things that I want to do. Definitely as a business owner or a solopreneur, you're definitely working hard and you're trying your best to put food on the table, and you're trying to just, live the best life that you can. We definitely need a process to be able to manage ourselves and create some discipline around our money. So that was the purpose of this video. I hope it was helpful. Subscribe if you like it. Check out the link below for Michael's book, and I hope it helps you and serves you. Take care.